presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compak Asset Management YouTube update for October the 10th, 2023. First of all, our thoughts and prayers go out to all the people, especially in Israel and the Middle East, all the war and unfortunately all the terrible things that are going on there. How are they going to impact the market? I'll talk a little bit about that. And looking at all the media that I do, you can also get Market Wrap now simply by going to compak.com/media. If you go there, you can type in this and you can download the app. There's a direct link there. You can download, you get this YouTube update plus the weekly, whenever I write a newsletter, you'll get all those updates. Let's talk a little bit about the Fed, the market, the economy, and technical analysis outlook for the week ahead. The Fed, this is the Fed fund futures rate lower than 1 week ago. That's what we're seeing. The Fed funds were here 1 week ago, and now we're here. So we have seen interest rates back off a little bit. That's what has happened. As I said in July, I think we're going to go through August, September, beginning of October. That's where the market goes down. Whatever the reasoning would be, maybe the Fed raises interest rates, they talk tough, scare the market, economy does better. But then I think the Fed will say, well, wait a minute, and if the economy gets a little shaky, stock market gets a little shaky, Fed will come out and say, well, we didn't mean it. We didn't mean to talk tough. That's exactly what has happened. Interest rates shot up. We got to nearly 5%. We got to nearly 4.9% on the 10-year note. And then the Fed, in the last 3 days, you've heard every Fed governor come out and say, oh, we think we've done enough. The surge in rates has been... So what they're saying is they're done raising interest rates. As I said in July, that's the last interest rate increase we're going to see in this cycle. You've heard me talk about what happens to stock markets when interest rates, they peak. When the Fed stops raising interest rates, what happens to the stock market 12 months out? You've seen the numbers. Over the 6 episodes we've seen over the last 40 years or so, 50 years, when the Fed has raised rates and the Fed has stopped raising rates, what has happened to the stock market? Again, I'll get into a lot more detail into that. Yield curve is starting to steepen, which is definitely good. That means that 10-year minus the 2-year. So that's, we get that, and that usually marks a slowdown. Looking at the wages, we got the unemployment numbers last week, and they, granted, were much stronger than expected. I thought on Friday that would kill the market. We had 336,000 jobs created. Expectation was for 170. So that means the economy is roaring ahead. That means the Fed has got to raise rates. But the wage increases slowed down. That means, yes, jobs are going up. People are still being hired, but the wages are not going up as fast. That's good news. What the Fed is trying to do is control inflation. If inflation continues to come down, maybe the economy remains good. Maybe they don't have to break the economy. Maybe they don't have to create unemployment. Maybe they can get the inflation rate down. As I said, it might not get to 2, but as long as it's going in the right direction, the Fed will say we are happy. I said that a couple of years ago, and that's where we are now, where we're going through this cycle. I'm going to do a live seminar next week, the last one of the year in Scottsdale. If you want to come and attend, make a reservation. Also, I'm going to do a live webinar in November, a couple of months away, and I'm going to do that. Looking at the technicals, here we are. This is resistance 44.14. That's the 50-day moving average. This is a gap right here, 43.75 to 4,400. We can fill this tiny gap. You see that opening right there between the 2 days, 1 day's low and the next day's high. That's, we got to 43.38 today. We got above the 50-day moving average, 20-day moving average, which is this red line. We've broken above that now. 4,400. I think if we fill this gap above 4,400, then we could start. Then this, as I said, turns into an A, B, C correction. After hit a 5th wave high, wave 1 is this, 2 is this, 3, 4, 5. Once you get to a 5, Either we have 5 waves to the downside or we get an A, B, C. And that's what we've completed. Went down to the 200-day moving average, which is we held that, started moving up. But we need confirmation to get above 4,400 to really get going. Same thing, this is the weekly chart. 44.11 is the 20-week moving average. We're at 43.58 today. So if you can get above 58 to really get going, then we get towards 4,400. Once you get above 4,400, then the intraday high is right around 46, and then there's 48. And then the long-term target, 5,000 to 5,150. That might be not until next year that I'm looking at that. NASDAQ, better picture. We're above the 20-day. We came and kissed the 50-day today, 13,622. We hit a high of 13,659, closing at 562. So it backed off a little bit, but we did come up to the 50-day. If we can get above the 50-day, which is 13,622, that'll confirm that we have made the bottom. Again, an ABC correction is what I was looking for. I talked about that in July when we made this high. Come back. Now we relieve the overbought condition in the market. Weekly charts holding up. 13,395 is the 20-week, which is good. Long-term is the high on this year's high, 14,450. I think that's the next target to the upside. Rates, this was my target right here, 4.93 to 5%, this window right here. We got yesterday, or Friday, we were at 4.88, 4.9. Didn't quite get to 4.93, but that's good enough. That also shows a 5th wave top in rates. That means rates could start heading lower. We're looking at 4.57, then 4.33. Those are the numbers I'm looking at the downside. Gold, it went to a waterfall fall right here as interest rates went up and the dollar went up. But last couple of days, people are running to gold for safety. It might have marked a bottom right here. So we might change this to 1, 2, 3, 4, and 5, and this might turn to a 5th wave going instead of a 3rd wave. That's my feeling, but we need to get above 1936, which is the 200-day moving average in gold. Crude oil fell off dramatically after kissing these highs that we saw last October, November. We got to 93, and we came right back down. We've got a little bit of a bounce here because of the situation in the Middle East, but I think that's going to remain contained as long as there's no problems in the northern part of Israel with Hezbollah, and no problems with the militias in Syria and Iraq. Those are all directed by the Iranians. As long as they say, look, whatever, we'll let the Israelis deal with this tremendous tragedy that has been on them. So we will see. And as long as it remains contained there in Gaza, it does not affect the markets as much in the short term. Look in the week ahead, CPI, PPI, that's going to drive this market. Those are my thoughts. Again, if you want help with your portfolio, give us a call or go to compak.com and set up an appointment, compak.com. I will be with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.